All right. Welcome to CIO Series number 20 by UOB Hian, with curated insights for wealth protection and growth. And today we have two very special guests, Adrian Harris, hi, and Cody Willard, both from Freedom Asset, to talk about US tech. The usual disclaimer, I'm sure you've seen this before. We are also doing something special today because we're going to offer you a language translation for the first time. So because this is offered by Microsoft, we accept no liability from any loss or damage arising from the translation of today's content. How to do the translation? I'll talk you through it in English and later go through it one more time in Chinese. It's a very simple three-step procedure. First, you go to your upper right corner or somewhere upper section of the screen. It says More. Go to Language and Speech and turn on your live captions. That's step one. Step two, there will be a small window show up, and on the bottom, there's a setting button. And please click on that to select your language. And step three, once the language option pop up, you can select any language you like. 好，请允许我再用中文跟大家解释一遍如何翻译中文字幕。首先，右上角打开你的实时的这个字幕，live caption。第二步，字幕出现之后，有一个字项是可以让你选择你的语言的。我不知道这个中文是怎么讲的，反正英文是 language setting。然后最后有了 language setting 以后，它会跳出来让你选择你需要什么语言。Okay, so I'm sure you get all of that. And before we begin, I want to have a quick recap of our house view. We made 5 predictions at the beginning of this year, and most of them are coming true. On China, we were right on the economy, that things are getting better than expected. And our latest message is for you to focus on the 3 C's: the economic cycle, the consumption, and children. We've talked a lot about this in our research, so I'm not going to go through it one more time. And prediction number 4 is a bit tricky. We got a lot of questions on this before, is what do we mean by asset price volatility? And today, let me just put that to rest, to show you a more clear explanation of that. Is really this year we need to watch for unwinding of some of the most crowded trades in the past. So to further explain, when I said asset price volatility is a risk, that's what I mean. Our study shows that normally the weak consumption is not the cause of a US recession. That's what the market worries today, that weakening retail sales and lower consumer confidence will hurt the US economy. But in most cases, it's not the consumption that dragged down the economy. It's really some kind of a bubble burst or some kind of a financial crisis. And here I listed 5 most probable asset classes, or 3 or 4 most probable asset classes that may go through this type of reset or bubble burst. You all know about the Japanese yen carry trade last year. That was a little bit scary in August. And today, Bitcoin also is a major source of volatility, a possible bubble being bursted. And gold is also very high. And last but not the least is what's going on right now with the NASDAQ, is that we are having a mini crash of the NASDAQ. You don't see it at index level, but in a single stock level, a lot of stocks are down 20, 30% year to date. And today is a very timely occasion to talk about exactly just that, is what's going on with the US tech and how things will pan out from here, and what sectors and stocks to focus on. With that, let me introduce Adrian Harris. He is the co-founder and CEO of Freedom Asset Management with 3 offices, one in Guernsey, Abu Dhabi, and most recently Hong Kong. And as far as I know, Adrian spends basically his whole career talking to institutional investors. And he's also an institutional client of ours. So later we're going to pick his brain on what Middle Eastern investors are doing and thinking about China. I think is also very interesting. And Cody, well, I'll let you introduce yourself, but I know you're a very seasoned U.S. tech investor, has done a lot of interesting things, and you have some very unique ideas. And now you're working with Freedom to launch a tech strategy, U.S. tech strategy. So, Cody, to you, why don't you give a quick intro?
Thanks so much for having us. Thanks, everybody, for being here. Yes, I am Cody Willard. I've been a long time what I call revolution investor. And what that means is I'm always trying to find the companies that are creating new products and new services and new applications that are changing the world forever. They change society. And a little bit about myself. I used to be almost famous. That's the way I like to say it. I had my own show on Fox Business. I was the Wall Street correspondent for the Tonight Show. But long before that, I've been investing in technology stocks, researching and writing about technology stocks, specifically mostly US centric stuff. But I've been in Taiwan Semiconductor, for example, for about 8 or 9 years as an investor too. So it's not just about all of that. As you can see sort of on the screen there, I've been featured on just about every major publication or every major financial news network, or even just general news networks. I've been on Today's Show and 60 Minutes and everything else, talking almost always about revolution investing and the approach to trying to find these companies and trends that will change the world forever. Some of my biggest hits that we mentioned down there at the bottom in my personal account, and some of these, I launched this. I launched a hedge fund years ago, but in my personal account, I also own all of these stocks. Tesla, $17 a share in 2019. Nvidia, believe it or not, split adjusted 80 cents a share. I bought in 2017, 2016 maybe. Meta, the month after it came public. Google, the day it came public. Apple, when Steve Jobs came back in March 2003 and they were about to launch the iTunes platform. And of course, I mentioned Taiwan Semiconductor. And in the private markets, I've been an investor in SpaceX for about 5 or 6 years. And all of those have been obviously revolutionary companies that are changing the world that we live in forever. And I think there are still many opportunities to find other companies that are doing that, other new trends that will come up. I think there are 3 most exciting revolution trends that we need to be in front of right now. But those are the ones that some of these companies that we list here are still some of my favorite companies. I think we have an incredible opportunity to scale into some of these things. As Xi just mentioned, the sentiment has shifted dramatically in the last 3 to 6 months on many of these technology names in the US. And we've got some incredible buying opportunities as people are scared. Of course, you like to take advantage of the fear. As Warren Buffett will tell you, buy when others are scared and sell when it's euphoric. There's no euphoria right now in these tech stocks right now. So we are actively buying almost every name we're going to talk about right now. I'm very excited about the setup for each of them.
Let's get to that more in a second. But, in addition to the extremely low prices that you get into these names, what is D1 baller? we can talk about that later too. But today we have pretty tight schedule. We have lots of audience on the line, and sure, a lot of questions. And the D1 baller definitely interesting. But a more urgent question I want to ask you is, where do we go from here? And maybe we can start with how do we get to this crash out of a sudden? Look, is it Trump? Is it macro? Is it China? Is it DeepSeek?
It's a little bit of, I think part of one of the biggest drivers of this downturn recently is amongst tech stocks is I think Crypto itself got to be bubblicious. I think the average retail investor around the world got greedy, and small cap theme stocks from, not the big AI hyperscalers, the companies that are actually building AI that we invest in, but the companies that pretend they are AI companies, small cap theme stocks in the AI industry, the quantum computing industry, which are 20, 30 years away from actually having a workable product. Some of those stocks were up 1,500, 2,000% in the last year. Wow. That stuff is needed to come down. The greed has finally dissipated. And like I said, we now have some fear. Partly, we should mention also, some of this Trump stuff is obviously weighing on the markets and even perhaps a little bit on the economy, slowly but surely. But, we're talking about Trump going, hey, we're going to tariff this and tariff that, and we'll tariff this country, but not that country, but we'll tariff this next month and this one this week, etc. That clearly, that kind of volatility in the regulatory framework of the U.S. creates some confusion, and if not, actually some fear. And again, we'll take the other side of all of that. The markets will adjust to any of the tariffs that Trump ends up running through the system. And there's no stopping the AI revolution, the humanoid robotics revolution, and the space revolution, which are going to happen no matter what the geopolitical and more specifically Trump's tariff policies are.
Well, it's great to have your passion when the market is so depressing. I know a lot of our clients got hammered in the last few weeks. Can we maybe focus a little bit on what you're seeing, or maybe just to remind us, like what are some of the big trends out there, and how we can capitalize on them?
Gee, that's the crux of all of this, right? We want to look out and look. These things will transcend geopolitics. They will transcend tariffs. These revolutions are unstoppable, and they are happening right now. I call the artificial intelligence revolution. Everybody is obviously aware that it is starting to develop. It is here and happening right now. I liken it at this stage to the dial-up internet phase of the internet, when you had to actually dial up, and you remember the sound, beep, and you got in at 56 kilobits per second, and it took you 10 minutes to download your Michael Jordan screensaver. That is where we are right now in the artificial intelligence revolution. We knew in the late 90s that the internet was going to connect billions of people around the globe. It was going to create millions of different businesses that would interact. Anytime that you can connect people, you're going to create prosperity and economic growth. Artificial intelligence is exactly there right now. We can all see that, hey, somewhere over the next 3, 5, 10 years, it will change everything about our world. And we are at a little bit of what we call FUD. In crypto lingo, they call it FUD. Fear, uncertainty, and doubt. And there is fear, uncertainty, and doubt around artificial intelligence right now. But that's one of the reasons I'm so excited. I mean, we've got this huge pullback in some of the most revolutionary companies on the planet that are creating this, one of the most important revolutions ever. The artificial intelligence revolution will also lead us to the robotics revolution, specifically the humanoid robotics revolution, but there will be other form factors. And that will probably be, not probably, that I will throw it on the line right now. The humanoid robotics revolution will be the single biggest revolution, economic and technological revolution that this world will ever see, other than the electricity revolution, which is what right now we're all talking on an electrical platform, or the electricity platform. That has changed the world over the last 200 years. In the same way that robotics will change the world over the next, it's not going to take 200, over the next 5, 10, 15 years. Nothing will ever be the same. A couple other quick ones I'll just mention. Augmented and specifically virtual reality, driven probably mostly by Meta and Apple, but others, Google and others, will also be very active and creating augmented and virtual reality platforms. The semiconductor revolution has been going on for 50 years, and it's accelerating still. Software development, in large part because, again, artificial intelligence is enabling it, is about to accelerate in ways that we like to say software and semiconductors are eating the world and they're getting hungrier. And finally, the space revolution over the next 5, 10, 15 years. Space is not quite ready for prime time other than specifically SpaceX. But as SpaceX drives the cost of sending things into space and into orbit to a de minimis level, they've driven the cost to get to space down 90% already. As Starship starts working over the next year, 2, 3 years, it will be another order of magnitude or 2 orders of magnitude drop in the prices, in the cost to get things to space. And the final point I'll make, I consider myself a smart guy, but I am not smart enough to come up with all of the brilliant applications, services, and ideas and businesses that these revolutions will create. The artificial intelligence revolution will change software, semiconductors, healthcare, medicine. Robotics revolution will change labor forever. Just manual labor itself changes in ways we've never seen before. In the space revolution will obviously not just be about mining gold on asteroids and going to Mars, but there will be hotels, there will be drugs made, prescription drugs will be made in space, semiconductors will be made in space. Anything that needs clean air and no dust can be made cost effectively in space 5, 10, 15 years from now.
Oh, well, it seems like there's a lot of things to cover. On robotics, I want to ask a question about China, but let's just not stop the flow. I mean, I think your points are so clear and well versed that I think we should dig deeper into it. My question is whether this will be kind of a reset button. In other words, my experience with these type of correction is that whatever comes down may not necessarily go back up. So is your thinking still kind of, you mentioned about Meta, Apple, and I know you're going to talk about Tesla later. Are we still sticking with those names, or will there be a new set of tech stocks emerging after this correction?
I'm going to say both. It's not mutually exclusive. I think one of the interesting things about the artificial intelligence and robotics revolutions are that the companies that have the leading technological platforms already, and we're talking Google, Apple, Android, Meta, Nvidia, they are the ones that have the access to the capital that will be required to take these new revolutions to the next level. And along the way, of course, there will be well-funded startups, there will be brilliant ideas and companies that are not even created yet that will be built on these revolutions. And we have to follow the entire sector. You have to know the private markets, you have to know the fundamentals of the economy around the world anyway. But yes, the answer to your question is no, it does. We do not move on from the greatest, most revolutionary technological companies on this planet that have taken us to where we are right now, able to around the world have hundreds or thousands of people watching us communicate on computers over an electricity platform.
Yeah. Okay, so you still like Tesla?
It's still like the Tesla, very much so. Look, I mean, it's an interesting dynamic. I'm glad you bring up the Tesla, because we've gone from what I used to call the Elon premium, because the stock would trade at a premium on a price to earnings or a price to revenue multiple, in large part because people loved Elon. And that love, the widespread love for Elon has in many ways shifted. There are half of the United States now hates Elon Musk and anything related to Elon Musk.
Yeah,
that stuff passes over time. And the fact of the matter is, if you make the best products that change the world and are better than everyone else's, it will eventually work out in the marketplace. And that's exactly what Elon and Tesla have done. The cars themselves are great. Electric vehicles, I'm on my 3rd Tesla. I drive a Cybertruck every day. It's the best vehicle I've ever been in, much less ever owned. those are great, but it's not about electric vehicles. It's not about cars at all at Tesla over the long term. The reason you own Tesla right now is twofold. You have the robo-taxis that will start hitting in Austin probably in June, sometime this summer, and then we'll expand out to other cities around the world, including, China, UAE, United States, everywhere. Over the next 2, 3, 4, 5 years, there will be driverless cars picking you up and doing exactly what you do right now in a taxi or an Uber, but it will be a driverless car. And Tesla has by far the best cost advantage to deliver those services. Waymo and others are already out there doing this stuff, but the average car for Waymo is $100,000 plus just for the LiDAR, radar, and other technologies that make that robo-taxi work. Tesla has 7 or 8 cameras in their car, and the software itself, the chips inside of the car themselves, and the Dojo supercomputer that they have built are what makes all that work. And even more exciting than that is the humanoid robotics revolution. That is the one that will take the world in other places, in places we've never pictured before. And Tesla, with their Optimus robot platform and all of the real world data that they're running through their artificial intelligence and machine learning data centers, is setting them, they're 2 to 3 or 4, maybe even 5 years ahead of any competitors in getting that humanoid robot that actually has functionality out into the world. And that's the one that's going to change labor, economies, societies forever.
But let me play devil's advocate, because
please,
Tesla's execution has been pretty poor in the last couple of years. If you look at last year, they missed a number of targets, including the Cybertruck targets. And, you talk about robotaxi was actually delayed. And how much is that to do with the fact that Elon Musk spent more time with US politics and even global politics and not enough time managing the company? Would that be a risk? Is that an issue?
It is a risk and it is an issue. There's no doubt about it. I mean, the fact is he's already running SpaceX, Neuralink, Boring Company, Tesla. He's got a lot on his plate. And the fact that he is now actively in the government, under the umbrella of the government and working hard on trying to, cut out waste, fraud, and corruption and in the budget, that's a distraction, unfortunately. But I think there's two primary reasons that he's doing that. Number one is he truly will help the United States has a deficit problem. There's too much debt already, and we still are running deficits every year. That has to be solved, or we will face another one of those serious great financial crises like we had in 2008, 2009. And furthermore, I think really the reason he's doing that is because SpaceX isn't going to go to Mars if the FAA and the United States bureaucracy keeps them from being able to innovate as quickly as Elon is going to. This robo-taxi is the same thing. I think what he's going to be able to do is get a much lighter regulatory hand on his business because of all the work he's doing in the government. And the fact of the matter is one of the most important lessons I've learned in my career over and over, the reason I bought Apple in March 2003 was specifically because Steve Jobs had come back to that company. The reason we invested in Google the day it came public was because the founders of that company and Eric Schmidt, the CEO at the time, are brilliant. The reason we invest with Mark Zuckerberg at Meta, brilliance. We always bet on brilliance. And I mean, there are plenty of people around the planet that will try to tell you that Elon is not brilliant, but they're wrong.
He's definitely brilliant. We're just concerned about his time allocation. Okay, quick question on how soon you expect the price to recover? Were there any triggers on the horizon, and what's your valuation on a stock?
Look, we've actually written a book. For years, all the sell side analysts are always like, hey, the car business and Tesla are fairly valued at $200 or $300, but they always tell you they never give any value to the cyber cabs, the robo-taxi business, and they don't give any value to the humanoid robotics business because frankly, it's too hard for them. I don't know. I don't know why they don't want to bother. So my partner Bryce and I actually spent 6 months putting together a book for ourselves. It's called The Ultimate Tesla Book. And the reason why we wrote it was because we wanted to actually put some value to robo-taxis and the Optimus robots. To answer your question, is I do think in 15 years, Tesla can have a $30 trillion market cap. Currently $750, $800 billion. Looking out over the long term, I think there's a tremendous amount of upside. But to answer your question about the near term, if the cyber taxi starts, if the robo taxis start rolling out this summer in Austin, Texas, and they work as well as I expect them to, again, I use full self-driving on my Tesla cars all the time. They work amazingly. It works amazingly well 99% of the time. They are going that I think that is a perfect catalyst to get the stock right back going upwards. And then as the Optimus robot starts being shown doing work inside of the Tesla factories and rolls out on a major scale, you've got, I mean, this stock could be at $500, $600, $700 this time next year.
Got it. Okay, let's move on. I know you also want to talk about Qualcomm. We can talk about the big trends, but I think it's, at this point, maybe we spend more time talking about stocks first, and then people on the call can ask about bigger questions later. There's plenty of room for Q&A. So what do you think about Qualcomm?
Look, I love the Qualcomm here. We're actively buying it. It might be the single cheapest tech stock on the planet right now. Trading at a 13 forward PE. Everybody knows, well, if you're a technology guy, investor, you know that Apple has spent the last 5 or 7 years trying to design their own modems so they don't have to pay Qualcomm 70% gross margins on Qualcomm's modems inside of that. Meanwhile, the Snapdragon and the CPU business that Qualcomm is developing is starting to take off. But most importantly, again, every single one of those billions of robots, whether they're cleaning your windows of your high rises or whether they're carrying your elderly grandmother around a old folks home, every single one of those needs communication chips, specifically Qualcomm's modem chips inside of them. And so I think we're going to a spot where right now Qualcomm, might sell a few 100 million units of their products a year. They will probably in 5 to 7, 9 years from now be selling billions of those products every year. And you can throw a PE at that point, maybe, or 20 or 25 on an E that is probably 10 times larger than it is right now. So I think we got, again, I'm looking for companies that change the world that we hopefully can own forever and that we can buy at good valuations. And Qualcomm fits that to a T right now.
That's awesome. Okay, I want to switch gear a bit. About Middle East. Part of the reason I want to get Adrian on the call is that, Adrian has been my go-to person if I want to know any movements of big institutional money in China and Asia. So Adrian, fire away. What are we looking at here? Are Middle East investors still interested in China? And with the recent rally, are there any changes in their thinking?
It's a great pleasure to talk always, and we've enjoyed working together over the last 5 years.
Excellent.
So we're based out in Abu Dhabi today. Freedom's biggest office is here out in Abu Dhabi, and because of that, we have good lines into a number of the sovereign funds here and across the broader region. Beware of anyone who says they have great lines, because I find there's a new sovereign wealth fund in Abu Dhabi born every 2 weeks and given about $10 billion or more.
Wow.
So it's quite a moving feast. But in terms of Middle East institutional investing into Asia and China, it definitely is the sovereigns that are driving that. They just have huge books. ADIA is somewhere north of about $700 or $800 billion. Mubadala here is $330 billion. There are, if you look at the PIF in Saudi, you're getting close to $1 trillion as well. So these are very large pools of assets. And the way to think about the sovereigns is they look at investing through two lenses. It's very much strategic. So if you are a relatively small geographic part of the world with some interesting neighbors, then you want to make sure that in a multipolar world, which is what we're moving into, that you have got good relationships with everybody. So you need to obviously have good relationships with the Americans, but China is not, it's not a power that you can ignore at all. And there's some extraordinary things going on in China and China's broader influence in the Asia region. So when the sovereigns are thinking about allocating, strategic is very important. So they want touch points with every major power center. So that's sort of, and you might say, well, how important is it? Now, if you're the Saudis, strategic is much more important than if you are, say, much more strategic, more important than sort of investment oriented in the way you look at things.
Yes.
And what the Saudis will be saying is, okay, we'll give you some money, but I want you to put a factory in Saudi. You know, Saudi Arabia is very, very keen to build up its internal manufacturing capability and just capital economy. If you're in a place like Abu Dhabi, it's a different trade because Abu Dhabi is just much smaller. They don't need car factories from China or from Indonesia. Actually, they're really much more interested in the investment angle and what's in it for them from that perspective. So I would say, you know, the other great thing about sovereign wealth funds is that they have an incredibly long time horizon. I used to have a friend who worked at the Norwegian oil fund, and he said, you know, it's so hard to explain to people that our time horizon is 100 years. Wow. So most people who are working on the fund will never see the real product of what they're working on. So and then sort of put it back in the Middle East. You know, Middle East has got a history of being traders, quite successful traders, and so they love things when they're cheap. You know, when there's blood on the streets, they're not afraid to buy at all. So so that, if you like, is sort of broadly the background. Public markets versus private markets. There's very definitely a preference for private markets at the moment because of mark-to-market valuations. But that of itself, you know, if you're a public market investor, that doesn't mean there's nothing for you, because private markets have to exit into the public markets at some point. You know, there is. So I'd say that is that's important. I've just been catching up with a few of the sovereigns this week ahead of our call, and there was a view that the China HM market is still very inefficient. So for those funds who are looking for alpha, that's a pretty interesting place to go looking. And just to give you a sense, so one fund that I was talking to this week, they're looking to double their exposure to Asia over the next 5 years. You know, and you measure that increase in tens of billions of dollars. So there is, I would say, there's a lot of outbound investing from the Middle East into Asia. Some of it's already got to China, and so there's a bit of leveling up with the rest of Asia. But you know, one of the guys I was talking to said, you know, it's kind of tricky because we want to do $200 million private equity deals in Indonesia, you know, on a co-invest, and how do you do that? You know, how many companies are there to do that? So there's a bit of a challenge there, but they're building out their teams on the ground. So there are teams already on a couple of the biggest funds in Beijing, but expect to see them put people in Korea, Japan, India, and then Southeast Asia more broadly. So I think that's the roundup.
Yeah, well, it's good to know the money at least coming back in some ways, and it looked like they're not just investing in China, but also technology. So my understanding that Freedom is also trying to launch a U.S. tech strategy run by Cody with Middle Eastern money. Am I right? Can you give us more information on that, please? If possible.
You're absolutely right. So we have a strategy. We're delighted to have Cody on board. We have that strategy, which is backed by one of our strong sovereign relationships here. And that is a strategy that we will be bringing to our broader institutional friends across the region.
That's awesome. And you will be back in Hong Kong next week, my understanding, right? So Adrian will be back in Hong Kong March 25th and on. And here's your contact information. Anyone who has more have more questions about the tech strategy, freedom asset management, or want to get the Tesla book. I want to get the Tesla book. How come you didn't give it to me last time I was in Hong Kong?
Actually, I couldn't believe we didn't bring it out there with me.
Yeah.
I came to see you
send me a
last
copy.
time, but we had just recently published. I'm happy. Look, anybody who reach out to Adrian, request the book, we're happy to just send you a copy for free. You can, of course, go buy it on Amazon or something. It is available widely, but we're happy to just send it to you for free.
Thank you. So I feel like we three can talk for another hour here, but it's probably not fair for me to dominate all the time. So we are going to open up for questions. Again, it's with no lack of topics. It's just that we want to make a service to all of you who are kindly dying to our webinar today and make it available to very smart investors in this business on U.S. tech and everything, I guess, AI or tech. So if you have any questions, please use the Q&A window to enter the question using text, and we will answer them in the order they come in. So while we wait for the Q&A, wait for the questions, I do have a couple of questions from my clients who could not join today's meeting. One obviously is on DeepSeek. And that may not change the US, but definitely has changed China. So everything we talked about so far, Cody, how does DeepSeek change your thesis, your stop picks, your sector strategy, that type of things?
I don't know that it changes it. It actually fits right into the paradigm that we're looking for. And that is, you want efficiencies to increase constantly. You want the price of AI to drop an order of magnitude. You want the cost per unit of energy for AI to work to continue to go down a very steep cost curve, because then you can build ever better applications and services, ever more intelligence into it. And so it actually fits right into the thesis itself. It is better for NVIDIA that DeepSeek came along and figured out ways to make NVIDIA AI platform more efficient and more effective globally. I don't think that'll be the last time this happens. You're going to see innovation inside of the tech stack itself, starting down at the electricity level. And of course, people are looking at nuclear energy and alternative energies in order to power all of this AI that's going to be required. But you want the AI to work as well as possible using as little electricity as possible. It's exactly what DeepSeek did. I think it's a wonderful thing. It makes it all better. And you are right that it changed China. I think when the DeepSeek moment happened, it opened up the doors to the world. It took the glasses off the world, and they realize again that innovation can happen in China, and it will drive AI forward with Chinese technology. And that's a wonderful thing. It's not either or, it's not a zero-sum game.
So were you surprised yourself about the rise of Chinese AI models?
I don't know if I was even surprised. It makes sense to me. I think it fits right into what you're looking for. I hope and expect that there are more revolutionary ideas and ways of getting more out of each GPU chip. As far as I'm concerned, the United States should allow the most advanced NVIDIA chips to be sold anywhere, anytime to anyone, because we want the stuff to advance as quickly as possible. And the United States always benefits as technology revolutions develop.
Got it. Okay, again, to everyone on this call, please feel free to ask any questions. using the Q&A window. I have one more question before we go to the line, to the queue, is on robotics. So you talk a lot about AI and the convergence, the integration of AI into robotics, but China is actually leading the world in robotics. Am I right? And are there any interesting trends we should monitor?
It is. I mean, I don't know that I would say that they're leading the world. I think there are, at this snapshot in time, China has more robotics companies and more viable robotic products that are actually out there being developed at this very moment. But Nvidia, Google, Meta have all announced. Nvidia's been working on a robotics platform for the last 5 or 7 years. Meta and Google just announced that they have gotten much more serious about the robotics platforms, but they've also been working on this stuff for many years. And I would say that Optimus Robot and Tesla are actually probably, again, even 2, 3, 4 years ahead of anyone in China. Unitree would be a great example. The Unitree robotics platform with their smaller humanoid robots at this point, and their dog form factors, those are great, but they do not have the level of intelligence, and they don't have the amount of data to build the machine learning level of intelligence that Tesla is already doing. But there's plenty of room for lots of companies in China, in the United States, and who knows where else to become major robotics platforms. We're going to have billions of robots running around this world in the next 10 years.
All right, do promise me that you look at China one day if this becomes an investable and big enough sector. I think there's a lot of interesting companies in the space from Hong Kong, from China.
Absolutely, there are.
Okay, so one question is about the prospect outlook for the AI infrastructure. Companies like Nebius or CoreWeave with the DeepSeek launch.
Yeah, so look, there's CoreWeave is probably going to be coming public somewhere in the next 3, 6, 9 months. If all of this stuff plays out and the market stabilize a little bit here, eventually it probably will come public. I actually am not a big believer in the startups that are trying to come on and become hyperscalers. I just think the access to capital that they have is going to be swamped by the actual spending with outright capital that the Googles, the Microsofts, the Metas and Apples already have on their balance sheet. And I wouldn't want to be trying to compete against those companies. I wouldn't want to compete against the hyperscalers as a startup.
Got it. Your views about the U.S. CHIPS Act and what should we expect from the onshoring of semiconductor manufacturing in the U.S.?
Oh, these are great questions. I love it. I pretty much don't think the United States government should be helping chip companies, whether you're talking about Intel or Taiwan Semiconductor. They don't need to take our tax dollars and try to help them build these factories. The demand and the economics would work out without the government's subsidies anyway. But yes, I am concerned that Intel is not going to be able to figure out how to compete against Taiwan Semiconductor, even with Intel's new fabs, because yes, Taiwan Semiconductor is coming to Arizona, the United States, and building these super fabs anyway. And I think look, you want to have redundancy in your supply chains anyway. The United States will be a fantastic place for these new fabs and these new chips to be made. Taiwan Semiconductor is probably the one that'll still dominate.
Yeah, but TSMC is expected to take over Intel's fab business, right? And stocks.
Theoretically, I mean, there's been rumors back and forth about all of this, and with the new CEO at Intel, we'll see how that all plays out. It would be best for the AI world if Taiwan Semiconductor does take over the Intel fabs, but I'm not sure that's going to happen.
Your thoughts on Freeport, AMD, and Salesforce? I'm not sure you can see the Q&A here.
I sure can. I don't have much an opinion at all on Freeport. AMD, I am not a big fan of. I think they're sort of the odd man out in the AI revolution. The CUDA software that Nvidia created in order to make this AI platform accessible to developers and programmers, AMD has spent the last year and a half, 2 years trying to figure out how to even compete against that at all. And there's a 10-year, 15-year head start for Nvidia on that. And then on the CPU side of the business, Qualcomm's coming out with new CPUs. The ARM-based CPU business is going to be secularly growing and taking market share from the old x86 kind of chips that AMD and Intel have dominated for the last 20 years in the CPU business. And Salesforce, we own. Big, Mark Benioff, CEO, another brilliant guy. That's one of the things we always look for. And I think the unique amount of enterprise data and the amazing user interface that Salesforce has built their business upon over the last 20 years has set them up to really be able to help enterprises, their customers, the biggest enterprises around the world, utilize AI agents in their customer service, in their supply chain, in their sales cycles, et cetera. And I think CRM is a very exciting play. The stocks come down recently, and we've been buying.
What's the negative impact on the legacy business? When I look at these software companies, whether it's Oracle or Salesforce, or even IBM, they have such a big legacy that might be negatively impacted by AI, right?
It's a great question. I think there's some differentiation between Oracle and Salesforce. I think there's differentiation certainly between old IBM's mainframe platforms and Salesforce, which is, cloud native from the beginning. And so, look, there's certainly threats to all software companies because the ability to create your own software inside your enterprise has never been as easy as it is with these new coding AIs that you can put together, and they help, your software engineer inside your company. It's 10 times more effective today than he was last year. And then next year, he'll probably be 10 times more effective than he was this year. But I think Salesforce will be integral to actually making all of that tie in. So much of that data is inside of their platform that you're probably going to need to stick with the CRM. CRM being the symbol for Salesforce, by the way.
Sure. I know we talk about Tesla and Qualcomm. Can we run through some of the Magnificent Seven names that tell us which one you own, which one you like? So I think Apple.
I have been in 6 of the 7 Mag 7s for Nvidia was probably the last. Actually, Tesla would have been the one I bought in 2019, Nvidia 2016, 17. I have been in Apple since March 2003. I've been in Google since the day it came public. And I'm in 6 of the 7. The only one I don't own and I don't plan on owning at all is Microsoft. I think Microsoft has really messed up their AI strategy by pouring so much money into OpenAI, thinking they were going to be partners and that Microsoft would get to build these amazing artificial intelligence agents and interfaces and get to make Copilot amazing. And instead, they have got a mess on their hands as OpenAI itself is rolling out competing agents and competing products to Microsoft. And other than Microsoft, I think that most of the Mag 7 are incredibly well positioned to benefit, and Microsoft is not.
Except for Microsoft. Okay. Yeah. Including Google. Google had the antitrust issue.
Yeah,
Does that worry you?
Sorry, Chi, what'd you say there at the end?
Google had this antitrust, anti-monopoly proceeding going on that could potentially break up the company or take away the Android business, or?
Yeah, I don't know. What I call the Republican Democrat regime has never actually enforced an antitrust law in my entire life. So I'm not sure this is the time to worry about it too much. I think Google is incredibly well positioned. If you know, DeepMind was an acquisition that they made 10, 12 years ago. The entire AI platform is built that Nvidia and others have actually leveraged, was built on the transformer platform that Google invented. And Google, with Android and with their search and with all the other data they have, they know more about each of us than anybody, unless you're on an Apple phone, an iPhone. And then Apple knows almost as much as Google knows about you. But knowing everything that Google knows about each individual user sets them up to really make a lot of great services and applications that you'll be able to use on your Google, Android, Chromebook, whatever interface you are using to talk to Google, it's going to be incredible.
Got it. What are you doing now these days with the tech strategy that you run? Are you buying on dips?
We are buying this dip right now. I mean, we have a slide that we glanced over. You maybe go back to that slide that shows.
Sure.
It doesn't show stock charts. What I pulled up was some Google trend charts.
Yes.
And if you'll notice, there has never been this right there. That one right there. Look at the spike in the worry about recession. The bottom right chart that I know no one can actually see the fine print on that, but the fine print doesn't matter. You can see that little blip in the middle is August 5th. That was the Japanese carry trade fear. Now we have everybody freaking out about recession on a level that we haven't seen in many years. You've got continued steady growth. The top chart shows artificial intelligence interest steadily growing still. The average person has heard about artificial intelligence, but has no idea how it works, when they'll use it. It's sort of like, again, in 1998, the average person had heard of AOL, but they were not using dial-up and going on and sending emails. And finally, the bottom left chart there shows you interest in people wanting to buy a Tesla. And there's never been more people interested in buying Teslas than there's never been before. But the answer to your question is, look, there's another chart that I don't have on there that shows a poll of a survey of Republicans and Democrats into this country. And the Republicans right now are slightly they're optimistic, but they're about as optimistic as they were at the COVID crisis, the day when it was hitting. The low of the COVID crisis is just about as optimistic as they are right now. And on the Democrat side, they have never been more worried, less optimistic about this economy, about the world's prospects than they are right now. I think the sentiment has shifted so quickly and so far to the downside, just at the right moment for us to be launching this fund and being able to buy these stocks. We're buying our favorite names every day. Every time they go down, we'll scale in a little bit more, and we've got some cash to put to work, obviously, and we're ready to do it on downturns, because I'm not sure we're going to get any better pitches over the next year, 2 years. And I think certainly you look back 5 years from now, you're going to be like, man, I wish I had a chance to do that stuff right then.
Yeah, it does seem like a good buying opportunity. We've also been telling clients that NASDAQ has likely overcorrected. In fact, I'm not sure we agree. Economy is not really a big concern for technology. In fact, most of the tech stocks do well during economic downturns.
Amen. I mean, that's just it, And look, markets go up and down. Stocks go up and down. I've owned Apple for 22 years. It has had drawdowns of 30%, probably 30 times. It's had a drawdown of 50%, maybe 3 or 4 times. And that's part of the process. But if you find the companies that are changing the world and they have the prospects to continue changing the world, you take advantage of those downturns and you build up the positions. That's exactly the playbook we see playing out right here, right now.
Agree. But one thing we cannot ignore is still Trump. Do you expect any policy uncertainty? Recently did a lot of talks about Trump probably cranking up the export controls on China. Nvidia stocks reacted to that. They want to plug some holes in terms of exporting AI technology to China, that type of things. And big deal for the semiconductor industry in the US. Did that concern you?
It concerns me a little bit. Again, I would prefer that he just let the free markets reign and let's go compete on a meritocratic basis. And the United States has so many platforms and so much technological advancement over the rest of the world. I think it would be fine anyway. But it's not positive necessarily for Trump to be, doing the tariffs and all of the controls and everything else. But again, Republican, Democrat administrations come and go, and their policies pretty much stay in this paradigm that we're still in right now. And there's no major shift in that.
Okay. Again, anyone who has a question, please use the Q&A to type your question. We'll answer them in the order that come in. So Cody, you talked about space earlier. This is an area that we're not that familiar with, especially in Asia. Tell us the story there, and are there any investable stocks right now in the US related to space technology?
There's some smaller cap names. There are a lot of space stocks. About 10 or 12 space stocks came public via SPACs, during the SPAC bubble about 5 years ago. There are two or three that I think are pretty good. The only one I own right now is called Intuitive Machines.
What's the ticker?
LUNR, lunar, basically,
Okay.
and Rocket Lab is another one that I have. I follow them all very closely, but frankly, to answer your question, I think we're too early. I think we're probably 5 years from space being a very investable. SpaceX in the private markets, or if Starlink is brought public at some point in the next year, that's an absolute no-brainer. The rest of them, I would be very cautious and careful. It's just, and the legacy space companies like Viasat and Telesat and some of the others are just, they're not investable. They've got terrible balance sheets. And back when they were sending their satellites up, it cost $1 billion. And now there are competitors to those companies that can send their satellites up for $5 million. And space is going to be there. It's something I've spent a lot of time studying so that I'm ready for it. But if I were to sort of outline the playbook, it looks like now through the next 3 years, the artificial intelligence revolution is prime time. The robotics revolution is probably also just slightly starting, but next year and the year after, the next 2 to 7 years, the robotics revolution is going mainstream, prime time, and going to explode higher. And then say 5 to 15 years is probably the outlook for space.
And the same story with quantum computing.
Quantum computing, I would say, is probably 20 to 30 years, 15 to 25
even longer
years. I think it's even slower than the space revolution.
Are you positioned right now in your strategy for quantum computing?
No, we have no quantum computing stocks. In fact, I think most of the theme, the smaller cap quantum computing stocks are probably terrible and headed lower, down 90% where they came from. Frankly, I was on CNBC or Fox Business 6 months ago talking about this. And what I told them is the winners of the quantum revolution are probably going to be Nvidia, probably going to be Google. Like it's the companies that are, again, the amount of capital that it's going to take to have a viable quantum computing product is going to be a lot of money. And the startups are probably on the wrong side of that.
You talked about the verticals earlier. They're also very interesting. You were saying that AI is causing revolution, not just in the technology industry, but pharmaceuticals, healthcare, services, financial services. Any interesting ideas there?
Look,
maybe not necessarily a technology company, but you will own it because of the.
Look, I do think there, some of the pharmaceutical companies are probably positioned to start really benefiting from better and quicker drug discovery. I think we're probably a little early on trying to game that stuff, and I don't know when it'll start being discounted, much less hitting the marketplace itself. I want to hit one thing that you just sort of underscored, though, if I could, and that is the biggest concern with AI and robotics right now is that labor is about to be crushed. And I think it's the exact opposite that is going to happen. We're not going to lose 90% of the jobs, but 90% of the jobs are going to become 10 times more productive, whether you're talking about attorneys being able to do their jobs 10 times faster and 10 times better, or whether you're talking about construction workers being able to put up a building that used to take 3 years and they're able to do it in 6 or 8 months because every single laborer has 1 or 2 Optimus robots helping him put the panels together.
So no stocks yet.
I'm not ready to do the healthcare stuff yet. And, and again, I think you want to own the companies that actually build the platforms that all of this stuff is going to happen on at this stage. And then over the next 2, 3, 4 years, we'll have some of the companies that will actually in other sectors that are just direct beneficiaries that will probably see their margins double or triple as AI kicks in and helps them, but we're not quite there yet.
Got it. But you will keep on our radar screen.
All I do every day, G.
Your tech strategy seems really interesting. I wish we can talk more about it. We're almost at the hour. There are no more questions in the queue. I want to thank you both for your time today. And again, remind everyone that Adrian will be in this part of our world next week for the next couple of weeks. If you need more information about the firm or the strategy they're running, please feel free to contact him directly. Thanks again.
G,
thank you.
Always great to see you, my friend.
Yes.
Thank you for everything. Great job today.